our entire North Star as a company is buying farms at or below market. If you overpay, the likelihood of getting that long-term appreciation number is obviously diminished.
Welcome back to the Purdue Commercial AgCast and our Lessons from the Delta series. In the first two episodes, we explored how farming systems in the Mississippi Delta differ from what many Midwestern producers are used to, from irrigation-dependent crop production to the unique economics of rice and farmland values in the region. If you haven't gotten a chance to hear those, I'd encourage you to go back and have a listen. Today, we're shifting the conversation slightly to look at the investment side of farmland. Who's buying farmland in the Delta? How those investments are structured, and what investors are looking for when evaluating farmland as an asset. While we were visiting Arkansas, we had a chance to talk with Colson Tester, an investment analyst with AcreTrader, a farmland investment platform headquartered in Fayetteville, Arkansas. Colson works on sourcing farmland investments, evaluating potential deals, and helping investors understand the opportunities and risks associated with farmland ownership. This is episode 3, our conversation with Colson Tester.
Colson, why don't you first just introduce yourself?
So Colson Tester, I am an investment analyst for AcreTrader, which is a farmland investment platform. We're a farmland investment group that markets to retail investors. So rather than some of the larger funds and institutional players in the farmland asset management investment space, we market exclusively to retail investors. So anybody that's accredited is able to invest in farmland through our platform. Accredited investors are defined in the SEC, the Securities and Exchange Commission, as someone who has an annual income in excess of $200,000, or you have $1 million net worth excluding the value of your primary residence.
If things would have turned around differently for me, those Beanie Babies I bought in the mid-90s, I would currently be accredited.
I think we can all safely say that had the Beanie Baby thing held up, we'd all be doing much better.
Yeah.
Okay, so your job is investment analyst. Can you walk us through the tasks that you do on a regular basis?
Yeah, the core of my job is sourcing farms for us to buy to go on our platform for investment. So my primary job is to go find farms for sale that we think are investment grade in interesting regions that investors would be excited to invest in. And that varies across geographies, different crop types, different lease structures. So I'm trying to find stuff for us to invest in and then doing all the due diligence on those properties. So we're talking to farm managers, talking to potential tenants or operators, get information on tile, yields, irrigation systems. If we need to make improvements on a farm, what all needs to go into that, budgets for what we think we can accomplish. And then I put all that together in a package, do evaluation of the farm, what we think it's worth and what we think we can buy it for. Then I present that to our investment committee who says, yes, this is an opportunity we're interested in. No, it's not. So that's kind of the core of my job. And then secondary stuff is I do a lot of, I write some articles for our website, work with people like Aaron on land values, publications and research, and then write a lot of the marketing stuff for farms. So because we're a retail investment platform, the structure that we use is pretty different from traditional funds. So we go under contract on a farm within our current kind of way we do things. We set up an LLC. We make an offer on a farm through that LLC. Once the offer is accepted, we go under real estate contract, and then the farm goes up on our investment platform for investors to allocate capital to. And in between signing the contract for the property and the actual real estate closing date is the window for us to raise capital. So a big part of my job as well is to make sure that farms that go up on the platform are attractive to investors. They have good pictures, they have good descriptions of the crop types. We give investors all the information they need to make an informed decision about whether or not they'd like to invest in a farm.
Well, and do you also outline your intended improvements that you aren't able to make yet? Like, so if you're going to grade a rice farm or put tile drainage on a corn and soybean farm, that's part of that description as well?
Yeah, so that goes in there.
Like the plan for it?
Exactly. And we have certain investors who look for, they're more interested in a rougher farm that we think we can add some real value to. And then we have other investors who look for really high quality, what we would call Class A farms that don't need improvements. They just want to invest in like blue chip assets. So we try to convey to investors what our strategy is on that specific farm.
Do you have investors that are caring about things like environmental impact or organic or sustainability, that sort of stuff? Have you seen more of a rise in that, or is it more people just interested in just give me the return profile?
I would say, I don't know if we've seen like an increase in that, but we definitely have a subset of investors who are interested in specifically organic. We've done, off the top of my head, I would say 5 to 7 organic farms previously. And we have a specific set of investors that say, hey, I only invest in organic. We have other investors who like to have exposure to organic and non-organic. And then we have some that are just more interested in, broadly speaking, sustainability. Like they like projects where we're going to improve the irrigation system, become more efficient, or we're working with an operator who's really likes to do cover crops or certain types of conservation tillage. So investors, we have a pretty wide swath of investors who look for different things.
Or investors that are interested in a particular geographic area for like emotional reasons or personal reasons. Are there people that are like, I've always wanted a piece of Iowa because that's where my great grandpa's from, and so this allows me to buy a fraction of an Iowa farm?
Yeah, there's a ton of that. If you just go to our website, AcreTrader.com, and click the Invest tab, everything that's open at the time is there. If any given point, if you go to the website, there may or may not be a farm available. We like to hold ourselves to a pretty strict underwriting standard, and sometimes there's not. We just don't have a farm under contract at that time that isn't fully funded. So we do have some down periods. We'd like to minimize that, but there's periods of time where we don't have a farm up. And then once we put a farm up, sometimes they go incredibly quick. Like a couple weeks ago, we funded a farm in 7 minutes. Other times it takes a month for us to fund a farm. It just depends on the size, the location, investor interest at the time.
So far, we've talked about how farmland gets sourced and evaluated for investment. Next, Colson took us to see one of the first farms AcreTrader ever purchased here in the Delta.
So we just pulled into AcreTrader 111, which is the first farm that we ever did as a platform. So this was back in late 2018, maybe 2019. So we've had this farm for 6 or 7 years, and it's a really small farm. So it's the first one we ever did. It's 40 acres plus or minus a couple. Really high quality soils.
Egrets.
Tell us about there's clearly you're not farming this. So who's farming it? How do you deal with tenants with something like this farm?
Yeah, so typically where we are in the Delta, a lot of leases are under a crop share structure. We do not do crop shares just because of the complexity of doing that with a very large investor base is a little bit more difficult. So we're operate almost exclusively on cash rents or flex rents. So a farm like this in the Delta would be just on a strict cash rent structure with a local operator. And I would say probably half to 75% of our farms, we're either working with the current tenant on the acquisition, or we're, as a part of the purchase, we're also keeping the current tenant on. So lots of times these farms are changing hands, but nothing changes in terms of the operator, kind of how they operate the farm.
Can you talk a little bit about how they sort of alluded to here? Like if someone is, for example, renting a farm that they're operating, and then the landlord that they have has passed away, and then the kids just want to offload it or something, that's where you guys potentially come in and take a look at it as something you'd want to maybe invest in like a buy and lease back, or maybe even land that they own that they're wanting to keep operating, but access to a little bit of capital or something. So can you talk a little about that sort of like purchasing or buy and lease back or that process?
Yeah, so I'd say that's our ideal deal, is one in which it's either a sale lease back where an operator's selling a piece of ground they own in order to recapitalize their operation, go buy a different tract, do a 1031 exchange, or it's a tenant who calls us and says, hey, landlord wants to sell, landlord's kids want to sell. I haven't operated this farm. I really like it. I would like to keep operating it, but I don't have the capital to buy it. will you step in and buy it and lease it back to me on a long-term lease that allows me to continue to operate? So that's sort of our ideal way to acquire farms. And we've spent a lot of time over the last 7-8 years building out a network of tenants to where we have enough contacts and name recognition that people know that we're who they should call when they have an opportunity like that.
Seeing the farm helps illustrate how AcreTrader structures these investments. But what does the investment actually look like from the investor side? We asked Colson about hold periods and expected returns.
When you think about supply, like farmland for sale and supply for us to buy, like available farms, it's pretty lumpy because the most logical time to sell a farm is when it's not planted in the off season. So we see a pretty high volume of deals come in between, say, late September and March, April. And then like this time of year, in the middle of June, July, August, it can get pretty slow. Investors are willing to invest typically year round, whereas our supply doesn't always match that investor demand. We typically buy farms in the $1 to $3 million range. That's sort of our sweet spot in terms of investor demand and being able to fund quickly because of that window between signing a contract and real estate close is fairly tight. Oftentimes, we have to be very confident that we can fund a deal quickly. So that limits some of the size that we can buy at. But we think there's a lot of opportunity to buy really good farms and work with operators, honestly, on bigger deals in the $3 to $7 million space.
So is it harder to market like a small farm, like in terms of acreage or tracts, right? It'd be much easier, you say, to like deal with like a larger scale parcel to drive more interest.
Yeah. And it's, so like because we're offering securities, we're taking a piece of real estate and turning it into a security. There's a fixed cost we have for every single offering. And on smaller deals, that's a larger percentage of the capital raise is fixed costs for putting the offering together. And as you scale that up, it becomes a better deal for investors because the fee structure is lower. Like the fee load on the front end, like the fixed costs are lower. And for us, it's just easier to manage rather than have a bunch of 40 and 80 acre farms. It's a whole lot easier for our management team to work with a tenant and a farm manager and do all the reporting to investors and lease management on, a quarter section or a half section, or frankly, if you could buy a full section. All that's easier on our end at that scale rather than doing it over and over and over again on smaller tracts.
What's typically the hold period or the ideal since it's fairly new?
Our typical number we give to investors is 5 to 10 years. That's our default targeted hold period. To date, we have 15 exits. We've sold 15 properties that we acquired. Those are typically have been before the target hold period. And some of that is due to you get a really interested buyer who just approaches us. We haven't marketed these farms typically. We just get told that like, hey, the neighbor's really interested in that farm. He has some capital, he's looking to make a purchase. Or we have a 1031 buyer looking for a farm in a very specific location. Yours fits. He's willing to pay a premium to get this location.
Sure.
But the vast majority of our portfolio at this point, 130 farms probably, we've held for multiple years, are just midway through the life cycle of the investment.
Like when those early exits though, like you kind of hit the return targets. Like that's why it made them attractive, is that premium that the person's playing. Like
yeah, on those early exits, we basically only consider those when the return profile to investors is higher than what the market rate would be or what we targeted off the start of the underwrite. So maybe we're targeting an internal rate of return of 7.5% or 8% typically, and we get an offer that gives us a 12% IRR. That's a compelling case for us to make an early exit.
Yeah. How about the investors? Let's say something changes and they need cash quick. Is there a way for them to get out fairly easily?
No is the short answer. And the kind of longer explanation is because it's a security in a private market, there's not a an open marketplace for the investments after they're made.
Sure.
So an investor is always able to sell their interest. They can sell their share of the investment to another accredited investor, but we are not licensed to facilitate that transaction.
Okay. So I could be in trouble if Todd was accredited and I was accredited. I could sell mine to Todd. I could transfer my portion.
Yeah, you can make a private transaction.
But I just want to let you know, Chad, you'll be doing that at a distressed discount because I'm doing you a favor here.
Yeah.
And it's really kind of doing both of us a favor.
So Todd's kind of joking there, but that's something that is a very real consideration. Like if you needed to sell a private security because you were in a bind, you're probably going to take some sort of discount to whatever the market value would be.
Cool. Can you tell us a little bit about your background, what kind of training experiences you had prior to AcreTrader, or potentially if that's different than what you're looking for now in similar roles in the industry, what kind of training experience would you suggest?
Yeah, so my background is I grew up in north central Arkansas, very rural, but not in a row crop background. So most of the agriculture around where I grew up is cow-calf production, and my parents had a cow-calf farm, still do. I was always interested in agriculture. I went to the University of Arkansas, did a bachelor's degree in ag business, and then stayed and did my master's in agricultural economics. And my research focus then was on cow-calf production strategies and herd management. After my master's, I went and worked in South Texas for an ag engineering company doing construction inspection. So worked more with like stream bank stabilization, dirt work, watershed lakes, watershed dams, things like that. And then came back to the University of Arkansas to be an instructor in agricultural economics. So in the same department that I graduated from. While I was there, I started a PhD in environmental dynamics, did that job for 2.5 years, and then through Aaron got connected to AcreTrader. An opportunity came up there to join them as an investment associate on specifically the row crop team and row crop underwriting. So I then took that opportunity and it kind of made that transition. When I took that job, I did not know anything about land values and investment underwriting. To me, the skill I brought in is knowing something about agriculture and talking to farmers. And then I've learned land valuation and investment underwriting from the more senior people on my team.
So you had one thing, our team would have never hired Colson without that financial modeling and quantitative background.
I had a question about modeling individual farms. Is there kind of standard assumptions that, like as a company, or are you really blank slate on every project trying to get through, this is how we think this far and the returns will evolve?
We have a base set of assumptions that we hold constant across all farms. So when we look at the potential appreciation of a property, so the increase in value over time, our assumption is that across the hold period, we can average the 50-year USDA average, which is something like 5.9 to 6% average annual appreciation. On our internal financial modeling, we don't deviate from that in terms of how we project the return or how we target our future return. We do spend a lot of time looking at where individual farms and what we think we can buy it for is relative to the market. So our entire North Star as a company is buying farms at or below market. So we don't ever want to overpay for something because the likelihood of getting that long-term appreciation number is obviously diminished if you pay above what the current market rate would be. And then the assumption then that's more gray that we have to spend a lot of time working on is the annual income. So what is the potential rent from the farm and how do we think that evolves over time?
And so, how much do you travel? Are you going to visit these farms before acquisition at some point, or someone from your team?
We do have somebody go visit the farms, but typically that's a local farm manager.
Okay.
So we have we operate pretty much coast to coast. We have everything from California to New York to Georgia and everywhere in between. So in all those places, we have a farm manager who checks on the farm, handles the individual leasing with tenants. They handle all the capital improvement projects, things like that. So that's our boots on the ground in the vast majority of farms, is getting them out to the farm and getting their take, and then getting all the info we can from operators. So that's one of the things that we're really interested in working with tenants on, is if they've been operating the farm, do they have tile maps? Do they have historical yields? A lot of times you ask them like, hey, if just don't worry about what it costs. Like, if you could tell me what you could do to make this farm better, what would it be? Get that feedback from them, and then consult with the farm manager on like, what's the potential cost of that? What does that do to the return, and how much more marketable does that make the farm?
And now what became the fixation of the trip? Another role that many Midwestern farmers might not be familiar with: water chasers.
So we talked about this last night. In the Delta where we are, almost all of crop production here is non-irrigated. So everybody is irrigating, and most of the irrigation is not from a center pivot system. It is furrow irrigation and flood irrigation for rice. So specifically for rice producers, they're putting on a ton of water and managing that water to keep the optimal depth on all of their rice fields is very time labor intensive. So a water chaser is somebody who is going from field to field, farm to farm, and managing water, monitoring wells, making sure there's enough water in surface water reservoirs, that wells are in good operating condition, the pumps are running, shut pumps on and off, and just managing all that system is...
Yeah, you're maybe tearing down levees, right?
Yeah, rebuilding levees after a big rain, looking at weather forecasts, trying to make
you're
sure
trying
that
to
your
figure out
water
how much is
plan
naturally there or going to be there. Yeah.
So an interesting like farmland values thing in the Delta is, hopefully this isn't too controversial of a take, pivot ground is typically inferior to furrow irrigated ground.
Interesting.
You put pivots on stuff that isn't leveled, is harder to irrigate. And obviously with pivots, you miss some acres. You have some dry acres where you otherwise wouldn't have if you're watering on furrows at the edge of the field.
And is this stuff then, if it's unirrigated, essentially worthless? It's like those dry corners, you couldn't do anything with them.
There's still some non-irrigated production, but I would say the value it holds is what it would go for irrigated minus how much it would cost to irrigate it.
Okay.
Like that's the kind of like the market value.
Conversations like this highlight how farmland is increasingly viewed not only as a production asset, but also as an investment asset. Platforms like AcreTrader are creating new ways for investors to access farmland. At the same time, these investments still depend heavily on the farmers operating the land and the production systems that drive returns. In next week's episode from the Delta, we'll continue exploring how irrigation systems and water management shape both farm productivity and farmland values in this region. If you're finding value in this series, make sure to subscribe to the Purdue Commercial AgCast so you don't miss what we're doing next. We'll continue this Delta series over the next several weeks, alongside our regular Ag Economy Barometer Insights and Implication episodes. And if you want to see some of what we're talking about, the fields, the levees, the water management, we're sharing short video clips from our Arkansas trip over on our YouTube channel. Those visuals may help really bring these conversations to life. If this episode sparked a thought for you, consider sharing it with a friend or another producer who might benefit from this discussion. Thanks for listening to the Purdue Commercial AgCast.